Let's make sure that we're logged in properly. This is Jim Cagnina with NinjaTrader. You should see a website, and then in the background, the NinjaTrader charting platform. I'm going to say good morning, since it's not quite noon yet. At least for me, it's not. Paul, how are you? Paul, give me a thumbs up if you could. I'll wiggle around the website. Oopsie, that was not good. I didn't want to do that, but that's all right. We'll recover pretty easily. Add these back up here one at a time. Don't get too aggressive with your mouse. That's a trading rule. All right, Jonathan, how are you? Paul, thanks for that. Appreciate that. We're going to get started right on time here. We got a couple of minutes before we do. Interesting trading day today. Hopefully everybody was able to join this morning's event. Remember, Tuesday and Thursday, we look for live trade setups in the E-mini S&P. And we had fun this morning, so feel free to join that event if you're interested. It doesn't matter who you are. If you're new to trading, you're old to trading, you're trading somewhere else, you're trading something else, feel free to join these. Teresa, good morning. Thanks for being here. We're right here. Top 5 indicators for new traders. That's what we're going to do today. Tomorrow, futures trading 101, and then there's some other great stuff on the schedule here at 2 o'clock today. Intro to order flow. So I got to finish less than 2 hours. We'll be less than 2 hours. Don't worry about it. Well, not much less, but we'll be less than 2 hours. We should probably be about an hour today. Is my guess. And then here's some other really good things to do. Order entry and trade management, charting, and additional training. So there's a whole suite of opportunities to go ahead and kind of tune in through the NinjaTraders daily training and education section. So feel free to do that at any point that you'd like. We'll get started right on time. It's literally a minute or so away, and we'll jump right into it. And I do appreciate everybody coming today. So sounds like we're good to go. Sounds like everybody could hear me okay. And I'll do a formal introduction in, I don't know, 60 seconds or so. So let's hang tight. All right, let's get started. Good morning, good afternoon, depending on where you're located. This is Jim Cagnina with NinjaTrader. We're going to talk about the top 5 indicators for new traders today. I'd like to welcome everybody, and I appreciate you being here today and taking time out of your busy schedule. I do want to remind people too that trading futures options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although that could work for you, right? It's an opportunity. It also it could work against you. It could be risky. So be careful. Only fund your futures trading account with risk capital. My personal definition, money I could afford to lose, doesn't change my lifestyle or doesn't lengthen my retirement horizon. I'm trying to click on that view full risk disclosure page right now, and my internet connection is not cooperating. But we're going to be on a real-time practice account today in simulated live mode. So keep that in mind as we go forward. Feel free to answer questions, ask questions in the chat box. I'll try to pick them up as we go, and I'll do the best I can to answer them. And if there's something I don't know, I'll tell you I don't know. But then I'll put it down in my notepad and I'll research it, and I will know next time. In any event, here's the risk disclosure again. Just be careful. Easy on the day trade margins, even though we do offer low day trade margins. Just be sure you're in a good, comfortable place when you are funding your futures trading account with risk capital, no matter who you're funding it with. Any questions on risk or anything like that, type them in. Here's my desktop. We're going to start from scratch here. I just got to pull up my notes as we go through today's session. Again, we're going to focus on technical analysis and not fundamental analysis, right? So we're going to really, build a chart book from scratch, and we're going to kind of talk about each incremental part that I'm adding. So what I'm going to do is I'm just going to go ahead and I'm going to lower this. This is a chart. This is the control panel at the upper left, quote board on the right called Market Analyzer, trading ladder on the left, and then another chart down below. But we're going to start from scratch here. So I'm going to minimize this stuff totally, and we'll start from scratch. I'm going to go to new, and I'm going to add a chart, right? Chart, pretty easy to do. And we're going to pick the E-mini S&P, which is one of the more popular charts. And you'll see the symbol is ES1221. That's just saying this is the December contract. That's number 12. And then the year is 2021. That's the year we are living in now. I'm going to click on that. And then I could customize the chart however I want. We're going to start with a candlestick chart instead of any of these other types of charts, including line on close, open, high, low, close, and you can see the drop-down menu here, everything you could choose from, but I'm going to start with candlestick. I'm also going to start with a minute chart. I could change it to a daily chart, a weekly chart, a monthly chart, a tick chart, any kind of chart really, but we'll stick with the minute chart, and then it'll be a 10-minute chart. That's what this value says here, 10 minutes. So I'm just going to hit OK, and it's going to open up chart, and I'm going to expand it to take up the whole desktop. Hopefully you guys could see this whole desktop right now. And it's kind of just move around. Typical candle chart, right? Green candles are up, red candles are down. We have wicks, or some people call them shadows, either on top or on bottom. I like to call them wicks. So the very first thing I'm going to do is I develop my chart book here, so I could, is my workspace, is I'm going to add what's called a moving average cross. And there's different types of moving averages, right? There's a simple moving average, there's an exponential moving average, Hull's, Wells Wilder, a double, a triple moving average. There's all sorts of different moving averages that have different equations associated with them. But I'm going to stick with the simple moving average. And again, this is going to be a simple setup. I started off a long time ago in the commodity futures markets, and I went from simple to complicated to simple and back to simple. The older I get, I think it's more useful. So here's the formula. It's really just, it's an average. And every time we have a new period that's formed, then that average changes, right? And so what we're going to do is we're going to go ahead and add the first simple moving average, and then we're going to add a second one, and we're going to develop a moving average cross, it's called. And here's the equation. It's not very difficult, right? We're just adding up the prices on every single period we're analyzing, and we're dividing by the total number of periods. So let's go ahead and take a look here. I'm going to move this out of the way. I'm going to right-click my mouse, really easy to do. Pick indicator, right? This menu pops up, a lot of stuff I could choose from, but I'm going to pick indicators, and it'll give me a menu of all the available things I could add to my chart. I'm going to scroll down to simple moving average, and it's SMA, right? Simple moving average. And I'm going to either double click on it, or I'll go down to my configured area and hit add. All right, so I have add on here. Now I want to change it, right? Because the default is a 14 period. And since I'm using a 10-minute chart, it's going to calculate 14 10-minute periods, okay? If it was a daily chart, it would calculate 14 dailies. But I'm going to go ahead and change this one, and I'm going to change it to a 26 period. And this is my preference. You can do whatever preference you want. And I'm going to first put up a slow moving average, and I'll talk a little bit more about what that means in a second. I'm going to change, so I change it to period 26. I'm also going to set it up so that every tick price change, it changes the moving average. So I just, on the label, on the calculate, I just changed it to on each tick, label SMA, that looks good. Everything else here, I'm going to keep the same except the color. And for the slow moving average, I'm going to use a darker color, maybe a blue. Okay, so all my parameters are set up, and I'm going to go ahead and just hit apply and okay. And let's take a look. So it's added a blue line to my chart, and this blue line is the moving average, right? And you can see it kind of it slopes up, it slopes down, it moves around in real time with the pricing, and it's calculating 26 prices based on the close of each candle going backward in time, 26, including the contemporary candle that we're on right now. So that's how it moves around. And so when there's a new candle, then everything shifts forward, right? There's the 26 bars now are the next one, the 27th bar becomes a 26 bar, and the first bar becomes a 0 bar. So everything kind of shifts forward, and it's dynamic and it moves over time. Now I'm going to add a second moving average, And I'm going to move I'm going to call it the fast moving average. So I'm going to go to indicators again. And I'm going to scroll all the way down to SMA. I'm going to go ahead and select it again. So I have a second instance of SMA on my chart. And it's, again, the default's 14. So I'm going to change it. And I'm going to change it to 6. It's going to be my fast moving average. And now you could kind of see why I'm calling this fast and the 26 slow, because in a 6 period, when there's the periods are less, the moving average is affected more on every new data point because it's only averaging 6 pieces of data instead of 26, right? So the prices are, the moving average is faster to move with less data to average. That's why I'm calling it fast. And I'm going to change calculate to on each tick, and then I'm going to go ahead and add the red. I'll make it red. So, red is fast. It looks fast. And I'm going to add it to the chart here. And so you can see it's kind of crosses up and over, diverges, converges, and stuff like that. I know the red's a little bit hard to see on the chart, but we're going to cure that problem in a second. Okay. So the slower one is usually smoother. The faster one is usually more jagged. And when we look at a couple different things as traders, and one of them is when it actually crosses, right? A fast moving average crosses the slow moving average. And some folks use that, some traders use that as a signal, right? Okay, this is a signal suggesting that prices are about to depreciate or go down. Alternatively, when the fast crosses above the slow, then that could be a signal or kind of say, hey, maybe prices are going to appreciate in price. The fast is changing quicker than the slower one, and we crossed over again. That's where the moving average cross comes in. The other idea here is to look at the convergence or the divergence of the difference between the two, right? Difference between the two. And that could also give you a clue. As they diverge, perhaps you have more confirmation that the market's going down. As they converge, maybe you have more information to suggest that the prices are going up. And that's just mathematically how it works. Now, one of the tricks that I like to do when I set up my charts is I'm going to move the moving average cross down a little bit lower. So what I'm going to do is I'm going to go back to indicators and I'm going to go over to where it says panel, right? Panel says, let's select the slow one. Panel says same as input series. No, I'm going to make a new panel and I'm going to hit apply, and it's going to bring it down to the bottom of the chart. And then I'm going to go back ahead and select the 6, the fast one, and I'm going to go to panel again, and I'm going to bring it to 2. Right? I created a new panel, panel 2, which kind of automatically populates after we generated the slow moving average. So I'm going to change that, and I'm going to hit apply, and I'm going to hit OK. So now what I've done is I've kind of made it easier for me to see the charts. That's all. Shane, so the calculation, so Shane asks, what's the difference between the fast SMA and an exponential moving average? And then Jonathan says the exponential moving average are calculated differently using more recent prices. Well, you're right. The equation is, Jonathan's right, Shane, the equation is different. In an exponential moving average, you have more of a weight on more recent prices in the average than you do on a simple moving average. In a simple moving average, every price point has the same weight in the calculation. In the exponential ones have a higher weight on the nearer prices in the calculation, and that's the difference. But for today's purposes, we're going to stick with simple moving average and talk about now that we have it on the chart. We could use our crosshair tool to kind of do some analysis. Let's take a look here at this cross under, right? At this cross under, and let's kind of move it up to match with the candle here. We had the fast crossed under the slow, suggesting, hey, maybe prices are going to start going down. And then you wait a candle. I like to wait a candle or two to see if there's confirmation on that. And it seems like this was a good piece of information, right? And again, we're looking back in time. This is a lagging indicator. So keep that in mind. This isn't the magic answer. This isn't, hey, we crossed under, let's go ahead and sell a contract. It's just another piece of information that you would feather into all of your other technical analysis information to decide, do I want to actually try to sell a contract here, or do I want to try to buy one? In this particular case, this turned out to be a good signal. As we went forward here, the moving average widened, right? It diverged. The distance between the blue and the red diverged, right? And that sure enough, markets continued to go down. Then we had a crossover, right? And prices started to appreciate again. We had a crossover, and then wait a candle to get confirmation. And then, maybe this was a good signal, maybe it wasn't. Maybe by the time you got confirmation, you couldn't go long anymore, right? Because the candle already has exhausted itself, and we kind of crashed back down. So this is a good case where the simple moving average on its own merits isn't necessarily effective, but it's another piece of information. The cross down was, the crossover wasn't, but that's okay. It's still giving us general idea of what's going on. The last thing I want to look at on especially on the fast moving average is the slope of the moving average. How fast is it decreasing? How fast is it increasing? So when the slope is big going up, that's another indication that prices, the trend of the price is up. If the slope is big going down, it's same thing. The trend is going down. So that's another component to look at when you're looking at moving averages. And then the 26 and the 6 numbers that I used, those are just my preference. You might say, hey, I like the 20 and the 10 better, or I like the 50 and the 15 better. Those are all the things that if as you go through and you go through if you have a NinjaTrader practice account or whatever practice account you're using, or if you're in simulated live mode, those are the kind of things you could practice and try to figure out what works for you. Okay, so that's kind of the first idea here. Is moving average cross. That's kind of number 1 out of the 5. Any questions on that, let me know. I'll be happy to try to grab answers. The second thing I want to add is I want to add an oscillator. And there's all sorts of oscillators to choose from. And let's just go take a peek. Indicators. Here are my available indicators on the top left. And you can see there's the Rune oscillator. There's the CCI, Shaken oscillator. There's the RSI, there's the MACD, the list goes on and on. So really what you want to do is pick one that you think works for you and practice with it, right? We're going to use the CCI, Commodity Channel Index. And a lot of these oscillators, they'll oscillate around a 0 line, or they'll oscillate between a band. And they try, and what it does is it measures overbought conditions, oversold conditions, but it also measures the velocity of the momentum of the move. And let's take a peek. I'm going to click on the CCI here, highlight it. I'm going to add it to my configured at the bottom by clicking on that add button, and then highlight it when it's down there. And then I'm going to look at the parameters. Now 14 is the default. Again, I like to change things a little bit. I'm going to make it 20. You could make it whatever you want. And on calculate, again, I'm going to make it each tick, right? Because I want to see that CCI moving every time the price changes. Now, the only other thing I'm really going to do here is I'm going to make the line a little darker so we could see it a little better. I'll make it green. And you could do stuff like change colors on levels if you'd like. The 100 level is kind of popular with the CCI. The -100 level is kind of popular with the CCI. So I'm just going to go ahead and change the color there a little bit just so we could see it a little better. We'll make them blue. And we'll make it blue. Okay, the 0 line is another color. That's another, I don't know. Let's go ahead and change the color of that one. We'll make that one a little darker so we can see it a little better. We'll make it red. Okay, so I'm going to hit apply. Now I'm going to hit apply and OK, and it's going to add it to another panel, right? So I got panel 1, which is the candle, panel 2, which is the moving average cross, panel 3, which is the CCI. And I'm just going to go ahead, and you could make these whatever panels you want to make them. Now that I see this in the presentation, I'm going to go ahead and make the colors a little darker so you guys can see them better. So hang tight. Just go back to indicators. I'm going to go back to the CCI. And then let's just go ahead and say, let's see, I could change the color. No, we want to do that. I could change the style. No, I could change the width. Okay, this will make it easier for us to see. Let's change the width to 2 for level 1. And for level -1, we'll make it 2. And then we'll leave the red line there the way it is. I think we could see it okay. All right. So there we go. So now we've made it a little easier to see in the presentation. And you can see now the CCI is at -101 0.43, right? That's pretty negative, right? That's suggesting downward pressure. But really what I like to look for, Michael, it does. Michael's going back in the Wayback Machine. He's going in the time machine right now, asking me if I know who Woody's CCI Club is. Yeah, the only person that was older than Woody was me back in the day. But no, of course it does sound familiar. But let's get back at the actual indicator here on the screen. So here's the 0 line, it's red. Here's the 100 line, it's blue. And the idea originally was, hey, if the CCI is above the 100 line, the market's overbought. If the CCI is below the minus 100 line, the market's oversold. I see less value in that idea than I do when I see how quickly this oscillator oscillates from a positive state to a negative state. How fast it crosses the 0 line, which is the red line. How fast it crosses the 0 line. Then, is there a continuation? Is it going to continue to cross above the 100? Is it going to continue across below the minus 100? So that kind of is, in my mind, is a good measurement of momentum and direction. So let's take a peek at this one right here. So this would be the 640 to 650 bar we had a cross, right? We crossed under the 0 line. The green crossed under the red line. And then the next candle, we have confirmation. And then the next candle, we crossed underneath the minus 100 line. So the velocity of this actual crossing of these two lines was quick, and it turned out to be a good signal, right? Momentum was on the downside, right? Now, again, this isn't something that we would automatically make a trade decision on. However, it's another piece of information to give us a clue on direction, right? And it's the equation. I'll show you the equation if that's at all appealing to anybody. Let's see if I could find it here. Here's the equation. So this equation is based on, the typical price, which is the high plus the low plus the close divided by 3, minus the 20-period simple moving average of the typical price, divided by this constant times the mean deviation. So you can see everything in here is based on previous data, right? So it's again, it's a lagging indicator. It's not a silver bullet, but it gives us some information on the weakness or the strength of the market, and then when price points are going to pivot the other way. Joe, we're going to get to the punchline. Joe's like ready to go. I want all 5 of those. I want all 5 of these indicators on the screen, and I want to know. We're gonna get there. Just hang tight. We got plenty of time today. It's only 12:19. From YouTube, Ferris asks, please create a video on order flow VWAP. We're getting suggestions from the crowd. I love it. What I am going to do, though, I'm going to write that note down in my notepad, and if that's a popular thing to do, I will do it. Order flow VWAP. He's referring to weighted volume average price, and we're not gonna talk about that today. That's not on my top 5. Spoiler alert. Okay, so we got a couple things cooking right now. Right now, we're kind of negative. We're slowing down on our negative. We're minus 92.47 on the CCI, and it's definitely prices are moving down right now. But this is suggesting maybe things are slowing down a little bit because again, what's the slope of this move, the duration of this move, and is it going to cross the 100, 0, or minus 100? We're just about to cross the minus 100, which, again, is going to be on the slightly bearish side. And when I look at the moving average cross, it looks like the moving average cross is starting to diverge, right? The faster one's going lower faster than the slower one. So that's another suggestion that, this market is headed downward, right? But let's go ahead and add the rest of the stuff. So that's the commodity. You could use any oscillator you really want, but try to become an expert at that one. Try to really study that one and try to make sense of it and understand what it's all about. Okay, number 3, order flow volume profile. This is my personal favorite. I'm going to go ahead and add that. I'm going to right click, and we're going to go ahead to indicators again. And I'm going to scroll down to where I see order flow volume profile, which is right here. I'm going to highlight it. I'm going to add it. And then I'm going to customize it. Now, calculate on each tick. We're going to add that. I'm going to keep volume the same, standard the same, profile period the same, Session's the same. Ticks per value, I'm going to change. I'm going to make it bigger. I'm going to make it 4 so it's easier to discuss what we're seeing. This basically is the height of every histogram bar you're going to see. It tracks volume. So if I were to keep it at 1, it would show the volume at every given price. I'm going to make it 4, so it's going to show the volume at every 4. It's going to track volume at every 4 ticks, which is a point in the EMA and the S&P. Then I'm going to scroll all the way down, and I'm going to show the volume labels. I'm going to hit apply. I'm going to hit OK. Now let me kind of manipulate the chart a little bit better so we could see it. Oops, that was too much, Jim. And there we have it. So every 4 ticks is a histogram bar. And then the volume, sorry for my bad manipulation here. And the volume accumulates when the market trades within that 4-tick range, right? And you can see right here, we're changing 24, 404, 430. Hopefully you could see that okay on the chart. Now, just to kind of give you a little bit more of idea what that means, to make it easier. Remember how I had it at 1-tick histogram bar before? This is a really neat kind of way to hammer home the idea. I'm just gonna add the trading ladder up here. I'm gonna go ahead and right click, and I'm gonna go to my my columns, and I'm gonna add volume. And then I'm gonna configure it. I'm gonna hit add OK. I'm gonna highlight it. And then I'm gonna go ahead and make sure that I have show volume text. I'm going to hit OK, apply, and OK. Now, when I had my volume profile set at 1, that's tracking the volume on every single tick, and this will take a second to populate. So while we're waiting, we'll let that populate in a second. There we go. So let me just freeze the platform right here. Let me actually make it a little bit bigger. Okay, so at 43.49 and a quarter, we've done, I'm sorry, I moved my mouse. We've at 43.50 and a quarter, we've done 5,557 contracts, right? It's moving around as we trade at that price level. And so that would be 1 histogram bar on the volume profile. If we did 4 of them and added all those numbers up in the blue on the right, then that would show us the numbers that we're seeing here. So this is just kind of another way to see how volume profile just tracks volume. It's not related to any individual bar per se, 10-minute bar per se. It's literally just tracking volume since you start the profile. I happen to start mine that, when the session starts, right? It's a 23-hour trading session. I started it last night, and we could see volume accumulate over time. And we're going to take a sidetrack here for David. So adjusting the chart, that's a great question, and I have a trick I'm going to show you. To do the I don't know, it's the y-axis. You're just going to grab it with your mouse and move it up and down. To do the bottom, you can just grab it with your mouse, move it sideways. To adjust the whole thing, I'm going to hold my control key down on my keyboard, and I'm going to click on it in the middle, and I'm just going to drag it to however I want to position it so I can see it. Those are the 3 techniques: control key down, grab the chart, move it around, or just kind of slide up and down. Okay. Let's kind of go back here now and take a look at this volume profile, what we're saying. So this is volume at every 4-tick increment. You could make it 1 tick, 2 ticks, whatever you want, but just for demonstration purposes, I think we could see this a little bit better. And a couple of things, the colors are interesting, right? So we have this golden histogram bar right here, which is the longest histogram bar in the whole profile. And all that's saying is, hey, this is where most volume has traded since we started. 68,759 contracts traded in this 4-tick range since the session started. This is called the point of control. This is called the point of control. And it's not necessarily magical. It's just based on math. This is the biggest one, right? This is where the most volume traded. Now, the dark blue is called the value area. The dark blue is saying, hey, I want what's 1 standard deviation worth of volume. In other words, I want to know when we're in that standard deviation worth of volume. I want to know when we're out of it. And when we're in it, we're in the dark blue. Right now, we're trading below it. We're in this light blue area below the value area, and that's called prices below value. I don't know who named it that, but it makes sense. It's prices below value. And then the light blue on the top are prices above value, right? And so what happens is you end up with this distribution that oftentimes looks like a Gaussian or bell-shaped distribution, right? Remember high school math, and that's kind of what we're looking at today. This is actually a really nice one. This is a really nicely formed volume profile. Sometimes you have two peaks, and that's what we call double distribution. Sometimes you have gaps. Sometimes the bias is up high versus the bias being down low. The bias is a little bit high today relative to prices throughout the day, but not extraordinarily out of whack, right? This hasn't been a trend day yet. We'd have to start making new lows and establishing volume below before we could say this is like a trend day down or a trend day up. So right now, there's 3 points of interest for me. There's the point of control. It does tend to act like a magnet on days that have normal distributions. And what do I mean by that? Well, look at how many bars traded in this range. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, maybe, I don't know, 30 of these 10-minute candles traded at that price today, right? The market kept gravitating back. And in this, when I see this phenomenon, what I think of anyway is this is price happiness. This is where over a longer period of time, buyers and sellers are happy with pricing. And so, they've expressed their opinion more times here than anywhere else. That's kind of how I look at it. Now, it doesn't always work like a magnet. And it's not a magical thing for me to say, hey, we're trading at 43.53 right now. We're going to end up back at the point of control, 43.65. Do I think that there's a possibility that that's going to happen? Heck yeah. Do I think it's a good possibility? Yeah, maybe. So, again, it's another piece of information I have in my head. And it also will help me place my stops and my entries, right? So let's say that I think the market's going to go down and I want to sell a contract here. Well, where would I want to put my stop? Well, maybe I'm going to use the point of control as a potential place to put it. Maybe I want to use the transition between the bottom of the value area and prices below value area to put it on there. So that's going to be another kind of more information that I'm going to have to help me determine where the market is likely to go and at what point I'm wrong. At what point is my trade wrong? Jake is in the room. Jake from Ninja. Looking forward to seeing you, my friend. Okay, so that's number 3 in my list of things that I want on my chart and I want to think about, right? Where's volume? Where's price happiness? Where are we doing? Michael says, notice high point of CC. Okay, we're gonna get into we'll do some analysis after I get off all my stuff on here. Okay, the next one is Fibonacci, right? It's not really an indicator. It's a drawing tool, right? And I don't know if anyone's familiar with the Fibonacci sequence or Fibonacci ratios, but basically, these are reoccurring numbers in nature. The Fibonacci sequence or the golden triangle. Basically, you're going to start with 0 and 1. You're going to add them together, and you're going to get a 1. Then you're going to take that 1 and add it to the previous number. You're going to get a 2. Then you're going to take that number, add it to the previous number. You're going to 3. You're going to take that number, add it to the previous number. You're going to 5. And then so on and so forth. So this sequence, this mathematical sequence comes up, you could do it forever, right? You could have the sequence forever. And when you start dividing numbers together, some of these Fibonacci sequences together, there's a recurring ratio that happens. And that is the Fibonacci numbers. So let me go ahead and just add it right now. And Javalal, I will do that. Hang tight. I'm going to go ahead and do it. And it's a drawing tool, remember. So you could either go up to the drawing tool here and find it on here, or you could use the F8 key to draw it, right? Now, one of the things that I like to do is I like to have my crosshairs on so I can really be precise. And what the Fibonacci I'm going to draw right now is going to be from high to low, right? I want to look at the high to the low or the low to the high because we're talking about retracement here. And now that I look at this chart a little bit more, I'm gonna go to the contemporary high, to the new low. That's how I'm gonna draw mine. So I'm gonna hit my F8 key. I'm gonna draw my line here, and I'm gonna drag it down. to the bottom. And now I've added a series of levels to my chart. These are the Fibonacci levels. Now, with one exception, the 76.4 isn't a real one. So it's a little bit off. And I'm just going to go ahead and right click, and I'm going to change my properties, right? And so it's easy to do. I'm just going to go down to levels here and click here. And I could either choose to hide it, or I could change it. You know, changing it would be 78.6 would be the proper number, or I could hide it. And the reason it's a proper number, but it's not part of, it's a little bit off on the sequence, because the way that a lot of charting softwares work is they just calculate what's the inverse of the 23.6. Well, it's 76.4, so let's put it there. So in my opinion, though, if a market is retracing back up to the 76.4, it's not retracing anymore. It's not retracing anymore. The trend's changed. So I choose to make it invisible. I'm just going to make that invisible and hit apply and OK. And now I'm good. Now, 50% is also not a Fibonacci number, but it gives us a good center point, and it's been universally adopted by traders. And a lot of times, you know, traders will argue this has a self-fulfilling prophecy, right? Has a self-fulfilling prophecy. So many folks are using Fibonacci that trades are executed at these levels that kind of make it work. And again, it's a weird thing. In my opinion, it's a really valuable tool to add so that you can get a really good idea of when we do have a trend, especially here, you know, high to low, you know, the market usually just doesn't go one way forever. It kind of settles down, finds support, finds resistance, and then kind of filters back up a little bit. And in this case, we're thinking, hey, buyers might come back in, and maybe if everything else isn't aligned, maybe we want to try to sell a unit at 38.2% or something like that. And again, after I add my last piece of information in here, we're going to go ahead and come up with a trade idea for good or for bad. We're going to go up and come up with a trade idea. Okay, so can you show how to add volume in the Superdome? Oh, that's easy peasy. I'll show you again. You're going to right click on the Superdome, columns. This is my easiest question that I've ever had. And then you're going to click on volume. You're going to hit add. It brings it down to here. Once it's down in the configured section, if you want to see the volume text, click on that. I'll leave that up here for a second so everybody can see that. That's how you do it. All right, hit OK. Let's get back to the chart. All right, so the last thing I'm going to put up here, is previous day's high, low, close. Okay, and I'm going to right click again. I'm going to go to indicators. I'm going to go to the indicator menu, and I think it's called prior day. Prior, LMNOP, where are the P's, Jim? Yeah, prior day open, high, low, close. Because, you know, sometimes when we're looking at a 10-minute chart and we're in the moment of battle, it's easier to have the information that you need in front of you instead of looking for the other chart, looking for the trading ladder, looking for things in other places when it's right here at your fingertips. So I'm gonna highlight it. I'm gonna add it again. And then I can configure stuff as usual. I mean, this is the great thing about the software is everything is you could customize and configure. So right now the default is show a line on close from yesterday, show yesterday's high, so yesterday's low, show yesterday's open, and then all this other stuff here. Again, you know, this doesn't really matter anymore, bar and close around each tick, because this is data that happened yesterday. It's fixed, and then you could color code stuff. You can color code stuff. Now, the one thing I'm not going to show, I don't necessarily care about yesterday's open, right? And this is just me personally. You might care about it. I don't care about it. I'm just going to unselect it. So I want to see yesterday's close, yesterday's high, yesterday's low. And then if I come down to the cheat sheet down here, which shows me the columns, you know, the open, we don't care about. The high is going to be green. The low is going to be red. That makes sense. And then prior day close is going to be purple. So I'm going to hit apply and OK. And, you know, here we got a purple line down here. This is showing us the close. And then if I kind of stretch up or stretch down, you know, you could find where here's yesterday's low. And so it kind of paints it on the screen, and it could provide some good information, right? So right now we're just slightly above yesterday's low, right? Which isn't necessarily a real bullish thing. in my mind. It's not. But you know, as long as we're in this normal distribution right now, and as long as things aren't too out of whack, I'm not going to be too worried about it. So let's kind of put all this stuff together right now and figure out how could we use these 5 pieces of information to make a trade idea. And we're going to make a trade idea. It's later on in the afternoon, so it's lunchtime in a lot of places. So you know, we might not see a lot of a normal price behavior right now. So I'm just going to throw that out there to the crowd. But the trend right now is down. Trend right now is negative. We have a series of higher lows. I'm sorry, I said that backward. We have a series of lower highs and a series of lower lows on these 10-minute candles. And this is kind of also a bearish kind of thing. CCI is minus 115. That's bearish. The moving average cross is still separating. That's bearish. And so everything I see right now is telling me, hey, and we're right at yesterday's close, is saying, hey, maybe this market's going to continue to go down, and we want to get short. And so what I'm going to do is I'm going to turn on my chart trader. I'm going to keep it in hidden mode, and I'm going to say, hey, if this thing retraces back up toward the 23.6%, would that be a good idea to actually sell a contract there? And I'm going to move my mouse across there, and I'm going to look at my volume profile and say, hey, that's right by the transition between prices at the bottom of the value area and prices below value. And not only that, we're starting to get some volume built up here. So I think this would be a good area of interest, right? So I'm just going to right click. Oops, sorry. I'm going to go ahead and right click. Okay, well, how come I'm going to go ahead and right click again? I got my do I have my chart trader on hidden? Let me just get out of the way of all the indicators here. And it's not letting me. So we're going to use the trading ladder. We're going to work this bug out in a second. I'm going to figure out what I'm doing wrong here. And I'm wondering if it's just because I have too much stuff up here. Again, I want to see a retracement back up to here. And so I'm going to pick that price, 55.50. I'm going to move over to the trading ladder, and I'm just going to click. I'm going to select an account. Oh, that's what my problem was. Aha. Let's open up the trade trader. You got to add an account. You can't trade unless you have an account. I figured it out. I know, I shouldn't be so happy. I should have known that. Let's do that whole thing over again. We're going to go back up here. I'm going to go ahead and right click, and I'm going to sell one at 35.25. Order submitted. Okay, so that order, if this were a live account, we're in simulated mode right now. This would be sent to the exchange. It would be in the CME group order book, waiting to be filled on a first come, first served basis. Okay. And so it's just move it over so we can see it a little bit better here. So what I'm saying is trend is down. All my indicators are down. We're starting to develop some volume down here on the volume profile. Even though our price is below value, I want to see a retracement back up to the 23.6, you know, and I placed my order right above that, right below the transition between the bottom of the value area, which is that dotted blue line there. And I'm going to take my hands off the mouse and be patient, right? And so this is my trade idea based on everything that I could see right now. And maybe we don't get filled. Maybe we do get filled and the market rallies against us and we lose money. I don't know. But this is, in my opinion, right now, I feel good about this trade idea. And we're going to be patient. And maybe we'll get filled and maybe we won't. Okay, so we've added the 5 top indicators, even though 2 of them really aren't even indicators, right? One of them, the Fibonacci, is a drawing tool. Fibonacci is the drawing tool. And the other one is the previous day's statistics, which I think are important. And you know, another thing that I'm worried about here is if we do close around yesterday's low, then that could be a very bearish signal for tomorrow. But that's a whole nother discussion, actually. Okay, so let me look at any questions, things I've missed, things you want to talk about, things that I could add to the conversation. Just type them in. If I missed a question before, I apologize. Michael says, notice high point of CCI at 3:30. Was that in the morning? Let's see if he mentions that in the, oh yeah, right here. Okay, so this is what he's pointing out here. You see, if you follow my crosshairs down, we had a pretty high, you know, positive 281 CCI up here right now, which the idea that, hey, this is overbought turned out to be a good idea. Right, because 2 more candles later, the market kind of broke a little bit, right? So in that particular case, the overbought idea, actually panned out. Could the CCI go higher? Yeah, it could have went higher for sure, or it could have dragged itself out sideways. But in that particular, looking back in time, that particular idea was a good idea. So when you see extreme peaks in the CCI or extreme value, negatives in the CCI, that also is going to give you an idea of market strength and market weakness. And then once it starts turning, once it starts curving around, I would say by this point, the signal's in play, right? The signal's in play. Moving average cross was still diverging on the upside. So that would have been that signal would not have jived between the two. But looking back on it, yeah, that was quite an extreme move for the day. Good eye on that one. Good eye on that one. Okay, and then Michael says, notice the loss of CCI momentum at 11 o'clock. Let me just kind of make it a little bigger so we could all see it better. Okay, are you referring to here where it's kind of like we peaked up here and then it sloped a little slower on one candle and then we turned around violently right there. I would look at this and say, hey, we were at above 100, right? We were in an potentially overbought area, and then pretty quickly we crossed zero into negative territory, and that's reflected in the chart itself. But at a certain point, you got to decide, is this signal a good one or not? And then I would use it in conjunction with the distance between the fast and slow moving average, and then everything else that we're looking at. Paul uses, yeah, so that's a great point. So Paul says he has a chart set as a dark background. It's a lot easier on my eyes. Yeah, it's a personal preference. How you could customize the look of the NinjaTrader charts to whatever you want. If you like black backgrounds, great. For me, it's kind of opposite. I like the white. I'm kind of old. In case you didn't know, I'm kind of old. I kind of like the white. It's easier for me than the black. I end up squinting more, I think. But personal preference, totally. So Joe, okay, so Joe has, let's see if I understand Joe's question correctly. How can you set up indicators to track continuously without stopping continuous calculations of data? All right, so if I understand the question right, let's right click, let's go to our indicators, and let's just pick the first one. Remember when I changed the setup calculation to on each tick instead of on bar close? If it was on bar close, you would have to wait for a new bar for the data to change. But on each tick, as each tick changes, the data changes, right? And you could see the number kind of moving around a little bit. And now it's 34, 36, 37, look at the right-hand side of the moving average. So make sure you have that calculated on each tick set. And when you do that, it should move it in real time as the price of the market moves. And that goes for just about anything. CCI, same thing, on each tick, order flow volume profile, on each tick, and you'll see the numbers in the actual histogram bars changing, and the bars getting bigger as volume is accumulating. Prior day open, high, low, close doesn't matter that much because that data is in the bank. It's over. It's passed. Okay. Just a verifier, Michael. We're going back to talk about CCI. So just a verifier of a weak market. Good comment from YouTube. David Riga says, "Will these indicators work on a 2000 tick chart?" Yeah, you could put any kind of chart you want. You could make it any kind of chart you want when you set up your charts. If you use tick charts, if you want to use even like open, high, low, close, or daily charts, weekly charts, whatever you want to use. The volume profile will only work on an intraday chart though. So that's the only thing. But yeah, tick charts, all this stuff should be fine. We'll be fine. I'm not a big fan of tick charts only because I don't know much about it. I haven't learned how to be good at that. So another thing I do want to change, FYI, I'm just going to right click. I'm going to go back to indicators. And I'm going to go ahead to my volume profile. And I'm going to change my ticks per level from 4 to 1. And let's take a look at what happens to the histogram bars. They get smaller, right? They get smaller. And so it gives you a more precise, look and feel. Does it make that much of a difference? I don't think so. I can't really see the volume anymore. But if you want to kind of have a different, more of a precision on your entries, you can. I think there's enough volatility in the E-mini S&P market where you might not need that much precision, because no matter how hard you try to sell the exact high or how hard you try to buy the exact low, it's difficult and it usually doesn't happen. Teresa, you're exactly right. If you want to try a demo, you could try it all out. If you go with the lifetime license, which gives you all the tools that you need, and it also gives you a way better commission rate, then I would go with that for sure. Yeah, Paul, I just changed it to 20. So really all I did was I just changed it to, let me just go back to the indicators. Paul wants to know what my settings were for the CCI. I prefer 20 on a 10-minute chart. That's the period that the calculation goes. When you look at the calculation, this is how many periods going back it's going to calculate. So that's why I have that 20 here. This could be 14. This could be, whatever you want it to be. But 20 is my number. I'm sticking with it. So Michael says, could you show the volume profile properties again? Yeah, let's do that. Volume profile properties again. Order flow volume profile. I click on it, and then here they are. I'll let this kind of sit here for a while. We're looking at our trade idea, just kind of in patience. Again, we're in this kind of weird afternoon mode here, and we might not get filled by the time we're done with the presentation today. But we will stick around for at least one more candle and any other last second questions. Okay, so let me know when you're good, Mike. These are the properties I have. And then if I scroll down, these are all colors. And then at the very bottom here, it says show volume labels. That's the other thing that is not checked when you edit. If you want to show the volume levels, you check those. And so, okay, so some great questions coming in. David, remember, Fibonacci is not an indicator. You're not going to see Fibonacci, the drawing tool, on here. You do see Fibonacci pivots, but that's not what I'm showing. I'm showing just the drawing tool. And the way you get to that drawing tool is through that little drawing tool icon on the top of the chart. It says drawing profile. You click on it, and then you're going to select Fibonacci retracements. And then you could just use your mouse and just click to add the retracement on the chart. So keep in mind, it's a drawing tool. It's not in that list. That's why you don't see it. I'm just going to go ahead and get rid of it. Okay. How do you read volume profile? Well, again, so this is it could be powerful. Volume. Okay, so we got filled on our trade order. Now this is perfect timing to answer your question. So now I'm going to use that to come up with a reasonable place to put a stop loss in, right? And so there's a couple of areas of interest, right? I have the transition between the value area and prices below. I have another point of interest up here, which is the point of control. And then I have the third point of interest, which is pretty high. I don't really see that many nodes or big indentations or double distributions in the middle of the profile, so that doesn't help me. But if I wanted to be aggressive on this trade and I wanted to be patient, I would use that point of control, and I would say, hey, that's in line with the 61.8%, and the 50% is right below it. So I would like to be, from a stop point of view, I want to be between these two. So this would how I would kind of consider using it in this particular trade idea. And I would just kind of right click, and then I could easily add a buy stop, right? So there's my buy stop right there. Alternatively, you might be more aggressive than that and say, no, if we do retrace back up to the 50%, I want to sell another contract, right? I want to have a 2-unit trade on instead of just a 1-unit trade. And so that's another way. But so again, the 3 points of interest are what I'm really interested in right here. And I'm really relying more for this trade idea on the actual Fibonacci lines and then the other indicators. You know, we're only minus 73 right now on the CCI, which makes sense, right? We have 3 green candles in a row and things are moving up. Am I terribly worried about the trade idea? Not yet. But you know, I have a stop in. It's important to have a stop in. It's a catastrophic stop because anything could happen. And I'll give you an example. I mean, this morning, you know, we had this downward velocity, and this was a down day. This was pretty, you know, bias was down, and then at a certain point during this, you know, at the 940 to 950 mark. You know, Schumer sends a tweet out or does an interview or something that says, hey, we're going to have a deal on the debt ceiling by today or tomorrow. And that set this market rocking, right? So that's unplanned news. That's things we don't know are going to happen that could happen. And as a result, you know, we might have had a good trade idea, but we have an adverse effect on our position because of some news that we had no idea was coming out, right? We had no idea. So that's why it's always best practice to put some kind of a stop loss here. And if this settles down a little bit, then I'd probably move it down a little bit more to closer to the 38.2. But don't discard the idea that this point of control isn't powerful right now, right? It is. And so right now we're kind of in a precarious spot from a stop management point of view, but we're going to keep it there for now. And we'll hang out. You know what? I know we're going to leave, but we'll hang out for another 7 minutes and see what the next candle brings us, is in store for us. Well, I mean, you could argue, Paul, it should have been a buy. I don't know. I mean, I'm just going to use all of my information that they have available to me and say, hey, you know, we have a negative CCI hovering around minus 100. The moving average cross isn't helping us at all. Decide to go long. Fibonacci numbers are pretty good, 23.6. Could we have been more conservative on our entry and say, hey, I want to sell it at 38 instead? I want to be more patient than the 23.6? Heck yeah. I mean, that would be a more conservative entry. Still, though, I don't know. I mean, I'm going to go with the majority of the information that I have on these 5 tools and make that decision. On any given Sunday, am I wrong? Yeah, for sure. Nobody's right all the time. You're welcome, Paul. And you know, we do more of this in the Tuesday and Wednesday live trading. Let me pull that schedule back up. And I got a couple other resources here I'm going to share with you in a moment. So on these Tuesdays and Thursdays, this is really where we experiment with these kind of setups. So feel free to come to any of those that you want. And then, you know, we take requests and we're interactive and it's a lot of fun. The other thing I wanted to show you was there's some pretty good video resources here on the NinjaTrader website. Actually, all right, let's first, let me cut and paste this into the control panel here. Okay, so that's for the trading platform. And then let me cut and paste, let's get rid of that. Let me cut and paste these video guides here, which could be helpful also when using the NinjaTrader software. You know, we got the get started section. These are submenus, right? Charting, order entry, workspaces and settings, ATM strategies, order flow. So these are little mini videos. They're all kind of short. If you see a topic here that you're interested in, feel free. I'm going to cut and paste this into the question and answer box also. Frank says, what happens when you change profile type from volume to price? No idea. Never done it. Which is true. I don't know. But, you know, I'm sticking with the way I have it because that's the way I like it. But again, experiment with it, download the software and experiment. We're right at this 38.2%. You know, in hindsight, it would have been a way better entry, right? It would have been a way better entry if we entered at 38 instead of 23.6. We're taking some heat right now. So that was a great comment by Paul, because now it has me thinking, Why was I so impulsive, right? Maybe we should have waited a little bit more for maybe the CCI to be more negative, or maybe the moving average cross to be separating a little bit more dynamically. So it's a good piece of information. I'm going to write it down on my notepad here. So the next time it'll help me reinforce a better trade practice. Paul wants to place the open trade. So, oh, you mean what price we opened at? Let's see. I don't know. Good question. Indicators. So you want open, high, low, close, right? Let's see if we got that on here. Open, high. I'm sure there's a way to do it. I just have never done it. Here's the prior open, high, low, close. Here's pivots. Let's see, open, high, low, close. You know what? I don't know. I'd have to go through each and every one of these and figure out how to do that. I'm going to put that on my cheat sheet. So next time I know the answer to that question. Again, it's just not something that I would do because I could see the field right now, right? I could see where we opened, right? I could see where we opened pretty much at the low. I could see where the high is. And we haven't closed yet. So that information is on the chart for me already, but I don't want to waste everybody's time and kind of struggling through. Oh, here, Gene says current. I got an assist. I have an assist from Gene. Let's see if that worked. Indicators. Current open, high, low, close. Wow, you're a genius. Thank you, Gene. I'm going to add it, and then it's color coded. I'm going to make sure my colors don't get all messed up with the previous day's colors, but you could modify those and you hit apply and OK. And it's going to add it to the chart. Oh, and look at that. It literally steps up on the highs. You can see a step, and you can see a step on the low. That's pretty cool. I got to consider that for future usage. Paul, thanks for that. But really, Gene gets all the credit for this one. Let's get rid of it, though. It's a little bit in my way. So again, remember, I'm old. I can't see very well. And less is better, less is more. Just like that Miller Lite commercial. Remember that Miller Lite commercial? Less is more. You'd have to be my age to remember it. Okay, going back to our trade idea. Yeah, so maybe we botched the entry, but right now it's the information that we have is still holding. Minus 74 is still pretty good. The moving average cross is still pretty good. And on the next candle, and we're going to wait for the next candle. I'm in no hurry. I could do this all day. I have a 2 o'clock Skype video conference with my boss. I can't be late for that one, but we still have plenty of time before we get there. So hang tight. And we're going to do this again also next week from today. So I think we're going to do three of these sessions again in a row. So meaning, once you go, do some experimentation and practice, you might have more questions about Fibonacci. You might have more questions about some of the stuff I'm sharing. So if come back next week, throw them in here and we'll tackle them then if there's something you're just not thinking about. So I'm not going away anytime soon. Sweet. Thanks, Gene. Appreciate that. Okay, so Gerald asks, how did you get the price information when you click on or put a crosshair on the bar? Easy peasy. So let me just put my crosshair on this big green bar here. And then I'm going to use there's a mouse roller on the middle of my mouse. I'm going to push it down. That's all I did. I just put the cursor to the bar I wanted. I push that mouse roller down, and it gives me the day, the time of the bar, 1050. This was, remember, Ninja's 1040 to 1050 bar. This is the price when the bar closed. Open, 62.25, high 76.50, low 62, close 73.50, and then the volume of that bar was 34,000. So that's one kind of nifty feature here. Thanks for asking that question. Okay, so we're right back to our entry here. Let's kind of last couple seconds here. Let's just kind of dissect this thing, and then we're going to move on. We had sellers come in with this big wick at the top here. Couldn't establish any ground at the 38.2, but the 38.2, in hindsight, past performance not indicative, future results, would have been a really sweet entry, and we didn't do it. We instead we were impulsive and kind of were more aggressive here. And I don't want to suggest for a second that this doesn't have a chance for the title, because it does. Still got a lot of time in the day, and our indicators, now we're minus 80 on the CCI, and moving average cross isn't budged. So, I'm not too, right at the transition between prices, prices at the bottom of the value area and prices below value. And really, hopefully what we could see here is some volume accumulating right where I have my crosshairs, right? And we can make a run for a second distribution or run for another point of control around 53. I don't know. We'll see what happens now. Now we're kind of in the money. And then I'll leave you to manage the trade however you see fit. I personally would consider something like this if I was in a hurry. In other words, I don't want to be in this trade all the way to the close. I would use this wick as an area of interest to say, hey, where do I want to place my stop? And I'd go a couple of points above that. So 62, let's say, and I'm just going to drag that down to 62 to kind of tighten my stop a little bit. Profit target, I want to see this low attacked again. I want to see that wick attacked again. Whether or not we're going to do it or not, I don't know. For some reason, my fib line is out of whack there. Make it a little bit better. And then I want to try to go ahead and see if I can get like a unit down below. Oops. So this would be the anatomy of my trade, more or less, as we log out here. I'm going to move it down a little bit. Tighten up the stops as we go. And then if it looks like the market's going to go sideways here and we get volume accumulated here, then maybe just try to get out for a point or two and be happy with the day. All right, Terrence, thank you for that. I really appreciate that. Thanks for spending your time with me, guys, today. I do want to remind everybody, you get a lot of leverage with your day trade margins and even with your regular day trade margins. The notional value of these contracts is big. They move fast. They're very volatile. And so you got a lot of leverage, a lot of volatility. It can be very risky. Only fund with risk capital. Slow your roll on that whole, leverage thing. Put your stops in, best practices. Have any questions, reach out to me anytime. And again, we're in real-time sim mode. Thanks, everybody, for coming. Hopefully see you next time. Tomorrow's Futures Trading 101. Wholly different kind of idea, but we're going to cover asset classes and stuff like that. Hope to see you there tomorrow. Finally, and remember, be safe out there and be good to each other. Take care. Thank you.